Markets for the past few weeks have been dominated by talk and thoughts of the upcoming US election. Now, this circus is gradually drawing to a close and will reach its either tragic or eventful climax sometime this week. And what I want to look at is the context of the way markets are moving in relation to the election, but also what traders can do during these sorts of times. And to some degree, this was prompted by this question I received. And it says, I'm interested in what trading approaches you are taking in the lead up to the US elections. It should be an interesting week ahead. And my somewhat blunt, very quick reply was, I'm not doing anything, simply because I don't trade uncertainty. And one of the problems that people face when they come across events like this is they literally take a bet. I'm not into betting which way markets will go or will not go in these very, very uncertain times. That's not what trading is about. Trading is about surviving over the course of your trading career and simply guessing as to what may or may not happen in the weeks ahead when you have such a dramatic shift in macro sentiment possible is not conducive to surviving as a trader. Having said that, I want to put the moves that the market's going through presently in some sort of context. These are the weekly moves for a series of markets for the past week. So you can see that over the past week, most world markets have been negative. Intriguingly enough, those that have been the most negative have been European markets. One could argue or construct a narrative that Europeans are actually immensely sensible and therefore have some idea as to what damage a Trump victory might actually bring to economies around the world. The point is, markets over the past little while have been universally negative, and there is a reason for this. The reason for this is uncertainty. Markets demand a risk premium when they are uncertain. So if we walk through this table, we can see the negative returns for each market, but down the bottom you can see a very large move in the VIX, the volatility index covering the S&P 500. It's worth remembering what the VIX is. The VIX is a collection of the implied volatilities of at-the-money, highly liquid options. Think about this for a minute. If I'm an options trader, an options writer, a market maker, and I'm entering very, very uncertain times, I'm going to demand a risk premium. I'm going to charge you more for doing my job to, in some way, try and insulate myself against what's occurring. The VIX is simply showing this in action. That's all it's doing. So when you get these uncertain times, you get this uncertainty premium built in. And it's necessary for traders to be very, very cognizant of this, that when things are uncertain, markets will demand from you a premium. You are paying for the privilege to pay. And so you run into this problem. And people who want to bet on these uncertain outcomes don't actually understand what it's actually costing them to take part. So yes, markets have been negative, but there is a contextual element to that I'll look at in a moment. And this uncertainty is demanding a premium from you. Traders want compensation for what they're about to do, so you need to be aware of this. And this uncertainty has filtered through to other markets. This is a series of US dollar pairs. You can see the US dollar has been universally weak across a range of pairs. That's also to be expected. This is part of the uncertainty of markets. Markets have poor uncertainty, and it doesn't matter what the instrument is. When there is uncertainty, you will get this sort of reaction. But again, there is context to this, particularly when in equities markets, that people miss. And they miss simply because their view is so micro. Traders, unfortunately, by and large, are like 2-year-olds watching television. They're jammed up against the screen and they're addicted to the flashing lights. They're also addicted to the nonsense 24 hours a day, 7 days a week news cycle, which produces nothing but rubbish. There's very little information in that. There's nothing in the signal they're getting other than noise. And this precludes any understanding of context. So if we look at these markets in context, we see something very, very interesting. This is the Russell 2000. Giant aggregation of US stocks. What you see is that the previous all-time high was made 500 days ago. So it's been a year and a half for the Russell 2000 to make an all-time high. It's gone nowhere in that period. This is the context that I'm talking about. And this is missed when you're caught up in the day-to-day gibbering of the gibbons that appear on social media, on television, on radio, in the paper. They have no concept that this has occurred because they merely look at what happened yesterday and make a comment on today versus yesterday. Well, that tells me about today versus yesterday, but it doesn't tell me about today versus 500 days ago. It doesn't tell me what the big picture is. The same is true for the S&P 500, the benchmark US index. You can see this glorious move up post the GFC, where massive amounts of funds moved out of real estate and, spurred on by quantitative easing, moved into the market. And the Americans had this wonderful bull market. We unfortunately did not. Locally, money poured into real estate and out of the equities markets. But we see a similar picture here. The S&P 500 is back below where it was in the beginning of 2015. So yes, we have had a series of down days in the S&P 500. But we've had those down days within the backdrop of a market that really hadn't been going anywhere for some time. So whilst it is dispiriting to have an equities market go down, it is nothing new. All the election has done is add a degree of uncertainty to that for which traders are demanding a premium. So in the context of the big picture, and the big picture is everything, not a lot has really changed. You still have markets that are indecisive, markets that are undecided. And that's not a new thing. That's not something that is unusual. And unfortunately, this is our market. And you can see since the GFC, we've really gone nowhere. We've gone sideways continuously. We've had little glimpses of hope. But by and large, nothing has happened. And I'm going to make a very blunt point about this towards the end. But with regard to, and coming back to the question of the election, the question is often asked of me, what should I do? What will happen? Well, here's the blunt answer. I have no idea. And anyone who says they do is a liar. The future is completely unknown to us. We don't know. I don't know. Nor does anyone else. And this also implies that you do not know. Now, granted, there will be people out there who take a guess and then construct some sort of post hoc narrative to justify why they undertook the decision they did, and they'll justify why it worked and why it didn't. But that's simply a narrative, that's a story. That is not in any way a form of reasoned, rational trading. I've just made up a story and I've had a punt on my story. And then I will backfill my rationalisation for that story, whether it works or doesn't work, post the event. So if it works, I will regard myself as a genius. If it doesn't work, I'll have some sort of rationalisation as to why it didn't work. Which brings me to the notion of where and what you should be looking at. No, I shouldn't say that, because that's implying that I can guide you anywhere. I can't. I can only present what I'm actually doing and let you judge that upon its own merits. In terms of markets moving, these are precious metals, silver, gold, platinum, palladium. These are their moves last week. As you can see, very strong, very vibrant, quite robust. Certainly much better than equities markets. And one of the intriguing things about trading commodities, be it of any sort, is that in many ways you remove yourself from a lot of the emotional baggage and influence that goes along with markets, because you don't hear stories about these markets all too often. You have to go looking for them. They don't occupy the thoughts of the popular press because they're too hard to understand for your average journalist. And if we take a step back, because in taking a step back, what we're actually trying to do is find markets that are moving, that have displayed characteristics of momentum and energy, as opposed to those that have not. We can see that for the 1 month, 2 day relative performance of a series of commodity markets, we have this, in volatility terms, if I turn this on its side, it would be referred to as a smile. 2 wings to the smile. The upper boundary are those moves that are positive, lower boundary, those that are negative. You can see that there have been a series of very strong double-digit moves in these markets. And they've been both positive and negative. And if you pause this video here and look through the list for equities, you'll see them clustered in the middle of the smile, offering really not a lot for traders by and large. And within this, I want to unpack this a little bit because there's 2 things in here I want to concentrate on that are important. Firstly, I want to look at the move in 2 commodities. So if we look at coffee for the year, you can see this inordinate gain for the year. Now this gain matches any gain that you've seen in an index or an equity for the year. It's also a leveraged move because it's a futures contract. By simply taking a step back and looking at different markets, you avail yourselves of these opportunities. The same is true for orange juice. Orange juice has displayed a similar strength in movement. We've run from a low of 105 thereabouts to currently sitting at 219. Very strong, very, very robust, continuous market. And this is the point I want to make about equities. Unless equities markets are trending strongly, equities are a complete waste of time. Equities are a very, very powerful vehicle in a bull market, but we do not have an equities bull market at present anywhere in the world. Most markets have stalled and stagnated, some simply because the bull market they had been experiencing is very, very mature. The US bull markets are extremely mature. European markets, particularly in the UK, have been rocked by Brexit, so they're not going anywhere. Yes, there are short, sharp counter-trend rallies, but it's not that continuous, sustained movement we want, and we're certainly not seeing that here locally. So trading other markets presents to you a raft of opportunities that equities markets do not present to you, so that when you get things like the continual noise, and it is a barrage of noise regarding the US election, and it does assault one's senses, and it does interfere with one's thinking, trading these other markets removes you from that. Because these markets tend to be more trend-following friendly in terms of the material you're presented with. They're certainly not the bombardment of drivel that we get elsewhere that interferes with our thinking. And irrespective of how disciplined you are, how circumspect you are in the information you take in, its all-pervasive nature means that it does start to seep into your subconscious, so therefore it will interfere with your decision-making. Removing yourself from these markets removes you from the emotional impact of noise, which means you can get back to actually focusing what the signal is. And in all of this, and this applies to any instrument, any vehicle, and it doesn't matter what asset class it is, unless you can remove yourself from the noise, you will never, ever, ever be able to unpack what the signal is. As a consequence of that, all your decisions will be based upon a series of, to be blunt, really half-assed assumptions and idiot ideas. Because that's what noise is. Think of it this way. news in any format is designed for the lowest common denominator. Now, if you feel comfortable being that lowest common denominator, then that's not a problem for you. But if you actually expect more of yourself and more from your trading, it is really incumbent upon you to remove yourself from the noise and to remove yourself from the very, very shallow end of the gene pool.